Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, April 16th, the year 2019. Let's talk trading. Horizontal lines, Wick zone. I hope everybody who had to got their taxes filed on time yesterday. And somebody, a trader out on, I think it was Facebook, mentioned something about trend. And those of you who've been following me for years, or possibly months, know that I believe trend is just a myth. It only exists in the mind of the trader. You can get a bunch of traders in a room, and some of them will say it's in a downtrend, and some of them will say it's in an uptrend, and somebody will look at a weekly chart and say one thing, and somebody will look at an hourly chart and say something else about trend. See, it just only exists in the mind of the trader. And the thing is, in hindsight, he said, well, look, since 1997, look at all he had all these things like Amazon and, a few other stocks, I guess Apple, that, made all these tremendous gains, and say this is a trend. Well, you know, yeah, looking back, you could say that. But, in 1997, did anybody say, hey, this is going to be an uptrend? It's going to last 20 years? Of course not. That's silly. But there is one thing that trends do have in common after the hindsight. They all started with a turn trade, an upward trend. There was a red candle at the bottom, and then there was followed by a green candle, or a bear candle followed by a bull candle. And I defy you to show me a trend that didn't start that way, because that's how it starts. Price had to make a bottom, turn around, and go up. And so what you can do is, you can, when you see these turn trades, you can say, oh, this is possible time to, get on the gravy train and ride it for a while. And as we go through the wick zones, we'll be able to see that. And since, you might get involved in a turn trade, and it goes against you, and then you could be all mad. And that's why you have to have money and risk management, because you see, you're guessing that this turn trade could be the start of a trend. But you have to, enter the trade, and when you do, you put yourself at risk. And that's why you employ a stop loss, so you won't lose more than you're willing to lose on that particular trade. It can't get any simpler than that. And so let's look here at the week chart. And so once again, all gaps filled. And we've got the three wick zones, or two wick zones and inside bar, okay? Well, you can see here, we cross below the low here, the wick zone. So you cross below that upper wick zone right there. So price went up, went above it, came back in, and now it's below it. And it's below it by about 16 pips. So once again, price doesn't like staying in the wick zone, and this is on the week, the weekly wick zone right there. Okay, actually this is showing on the daily. So you can see here on the daily, there's not much of a wick zone, but it crossed below the low. And on the weekly, you can see here, it's in between the weeks, the zones. Okay, even though it did come up and cross below, but as far as looking at a weekly chart, it's saying the position of price is right here within the candle body of the previous week's candle. See, with the wick zones, there's really not much to explain. I showed you the frequency distribution, and it's going to usually come out of the wick zone about 6 to 7 times out of 10. So you've got you got the odds in your favor. And the thing is, you have to manage those trades so they don't, you only get a couple of pips here and it comes back in. Maybe you stopped out inside that zone, maybe you didn't. But if it hits this and comes out the other side, you've got to stop and or reverse. Okay, that's the rat zone. And once again, we can see here on the daily, it popped out that lower wick zone, 48 pip range, only 20 on the yen. I mean, really anemic on the dollar yen there. Okay, we're looking here. Since I was changing things around, so I had the computer on for a while, but I was switching off of the different chart profiles. But let me do something here. Make sure we got, whoops, that's, go back to yen. And that alert, just if you're wondering why the alert sounded, right here. Anytime you get a wick over 10 pips, this will alert you. This wick histogram indicator that I made way back in 2009. So that's the sound alert, 10 pips. But what I wanted to show you was a couple other things. I have, you guys have seen the wick zone indicator template, but I wanted to show you something else, the dynamic wick and then the wick zones. So we've got the wick zones and dynamic wick. These were 2017s. Now you can see here we've got the wick zones indicator set up for the daily and weekly, but you can add time frames to it. If you really wanted to go crazy, put all those different time frames out there, and then you'll see you get a whole bunch of different. So month, no. Week, no. Day, no. But the price is in the H4 and H1 lower wick zone. You can see here we've got the H4 shaded because it's the highest one. And you can see here on the H1, because we're on an H1 chart, that price is in that wick zone. And if we turn off the dynamic wick zone indicator, no, let's turn off the wick zones indicator. Guess what? This one doesn't have an off switch. I might have to put the off switch on. So what we can do here, oh, it's interesting. I didn't do that. Only show current period false. We could do a true. And so you see here with the dynamic wick zone, it shows you which candle it's in right there. Let me do something. I'll come right back. I added the buttons indicator so we can go look at some other pairs here. So you can see here the dollar yen is in the wick zone here 2 bars ago. Let's see, what else we want to look at. Let's look at CAD 2 bars ago. So that's why it's called dynamic wick zone. It's showing you where if price is in which wick zone, the closest wick zone or most recent wick zone that price is in. Looking at the euro, so you can see here where the euro is, it's within this wick zone. And so what you can do with this is, if you're looking, say, long term, you say, oh, it's in this wick zone. But you see here we have a turn trade, went up, but then it came back. We've got another turn trade situation, which could be the start of a trend, right? So this just gives you an idea. It's like, okay, we're in this wick zone, but you can see here there's a lower wick zone. So this would have been a great place here to do a wick zone trade for the long haul. And if you switch over to the daily, you can see here another turn trade at the bottom and price is going up. So is that a trend? Is the euro in an upward trend? I don't know. Is it in a downward trend? Oh, look here. Is it in a downward trend or is it in an upward trend? You see, that's why trend only exists in the mind of the trader. And okay, so now you can see here 5 days ago, we are in that wick zone. But you see, if the price were to drop here, then the dynamic wick zone would say, now we're in this range. So that's how you use the dynamic wick zone. I'm sorry, yeah, that's the dynamic wick zone. And we can turn that off. And now we can just look at the wick zones indicator. And so here, oh, it's kind of hard to see. Let's do HM15. Oh, okay. We need to set something back in the wick zones. Only show current period false. See, we're only showing the indicator when it's in the zone, and we're showing priority. We have false. So now you can see here, it's in a whole bunch of wick zones, and it's showing this and things are overwriting. So what you can do here is if you show priority, then it will show you the priority is the order that you put it in. So since we had H1 first, that's the top priority. And you don't have to put them in order. You can put them in any order you want. And then you can see here, we've got some fibs. Somebody wanted me to put these fib lines in for them. So I did. But you can see here, we're in that lower wick zone of the H1, but we're on the M15 candle. But if you look here, you can see where we are on the H1. So that's just showing you, how to see the wick zones and how to apply them in trading. Basically, once again, price doesn't like staying in the wick zone. So if you know price is in a wick zone, then you can go for an exit either to the top or to the bottom, depending on what you are trading. So here you can see, is this a downtrend? I don't know. Maybe it's an uptrend. I'm sorry. Actually, I'm not sorry. It's just when, I get into those debates, discussions, I try to avoid them, but, they come back. And I just, my nature is I'm just going to poke fun at it. You can laugh at me, laugh with me, or you can laugh at me. It doesn't really matter. It's just, everybody gets to choose what they believe in and what they do when it comes to trading. So I just try to point out the fallacies and have fun while doing it. So once again, we're in this wick zone. Price most likely will exit that wick zone. So if, Larry live trade, there you go. And here we go. We had a little trigger there on the Einstein line. So that's it for today's wick zone. I got a few more things to show you in the next couple of days. But just remember, it's not what you trade. It's how you trade it. So get out there and drain the banks.